Moyeen Islam. He is a fixed income strategist and director at Barclays Capital. Good morning. You've been up all night watching these results come in. I mean, if there's one thing that the markets hate, the old adage goes, is uncertainty, and that's certainly what we're getting at the moment, isn't it?
Yeah, I mean, without a clear mandate for any single party, what seems to be apparent is that there will be a fair amount of horse trading, to be honest, over the weekend or over the next couple of days, all of which means that a clear fiscal programme to deal with the UK's budget deficit issues, is unlikely to be put in place and unlikely to be enacted, which spells fairly bad news for gilts going forward from here.
Indeed. I mean, there has been this idea that, that the markets here in the UK are almost on probation. Everybody's been waiting to see what happens with this election, whether we do have a credible plan to cut the deficit. We're not going to be any closer to a credible plan, it looks like, by the end of today, anyway.
It's certainly the case. I mean, it's worth emphasising that the plans that have been put in place by the various parties are fairly swinging. For instance, what was published by the Treasury in the budget for the current administration, that is the current Labour administration, that is, were probably the biggest cuts in real terms in spending since the IMF involvement in '76.
And yet they're going to need to be even more swinging. I mean, the Institute of Fiscal Studies has said that nobody has actually come out with quite clear enough plans yet.
I think the kind of the gorilla in the corner, so to speak, is kind of really a real addressment of some of the big issues on the welfare side, such as tax credits, universal benefits, etc., which really haven't been addressed at all. No,
so far we've heard that the bond market's really got a muted reaction. There's an awful lot at play here today. Do you think that Wall Street is going to be a bigger effect than the election here?
I think it certainly will be. I think what's crucial will be the way that gilts perform over the next couple of hours or so as liquidity comes into the market, as people drift into the office. I think what's happened overnight is fairly extraordinary moves in US equities, very strong US fixed income. Yet on the other side of that, of course, you have contagion risk from Europe and a general draining away of market confidence.
Let's talk a little bit more about that contagion risk from Europe. So far, perhaps strangely, perversely, the UK has been seen as a safe haven. How much longer do you think that can continue?
I think that's the million dollar question, really. It really must depend on what action European policymakers will take to address the ongoing fiscal saga that we're seeing in Europe at the moment. The market had pinned its hopes on the ECB saying something definitive yesterday, but Mr. Trichet was fairly adamant that intervention in the government bond market had not been discussed by the Governing Council. And yesterday afternoon we saw fairly brutal moves in European government bond markets as the market was really disappointed. So really it comes down to an issue about market confidence at the moment more than anything else.
Okay.